Over the past couple months, the global markets have taken a beating. And it's hard to know why when you're looking at a million different sources and trying to piece everything together. So, today we're going to meet with a professional who's going to dumb it down to the basics so we can understand it. Between OPEC, COVID 19, there's a lot to take in. And today, here on Real Estate Chatter, we're going to break it down.
Hey everyone, thanks for joining us today on Real Estate Chatter. I am Tim Keys with Tim Keys Real Estate, and today we have Alejandro. He's a financial advisor with Quasar Financial and an investment fund advisor with Investia Financial Services. He's also my financial advisor. Make sure that we're making money every year out there on the markets and managing all those portfolios and relationships with portfolio managers. Awesome guy, and he's going to walk us through exactly what's going on right now with the coronavirus and the market. There's a lot going on. It's crazy. And it's important to have somebody on your side who's a professional, who knows what's going on and can give you accurate information on the whole. So let's start things off. Thanks for joining us, Alejandro.
Yeah, thanks for having me, man. And let's just clarify. I'll tell you what's going on in the investment world, not so much with the coronavirus in itself, because I don't know anything about it.
No. I just know we got to stay home, man. We'll stay with that.
Yeah.
Oh man. We'll stay out of that arena. We'll stay out of the medical arena. So first of all, why don't you give us a quick summary of what's going on here? So 6 weeks ago, the world was normal. Everything that we knew was, spring break was coming. I had a trip booked to Europe and a flight booked to Italy. You had a trip booked as well, and obviously that's not happening anymore. So the impact of the coronavirus has been huge, not only in our day-to-day social lives, but in our financial portfolios. And can you give us a quick little roadmap of what's happened over the last 6 weeks, what we've seen in terms of numbers, what kind of decrease we've seen in the market, and we can start from there.
Yeah, for sure. I can't put it any other way that really the last 6 weeks, or part of those 6 weeks, especially the last couple, has been nothing more than mayhem. We've been in the longest bull market that we've had really in the history of financial markets, over 11 years now. At the beginning of the year, we were starting to see a lot of the equity markets globally really being somewhat stretched. Valuations were fairly high. We were rocking. People should have been taking earnings off the table as we progressed through and becoming a little cautious, because we were also starting to see somewhat of a global slowdown. Having said that, what happened in the last couple of weeks with the coronavirus, some people might say that they completely saw it coming, but the effect as to how quickly it happened globally and what it's done to the financial markets, I would argue that not many people saw it coming that way and that fast. It completely put a full stop to the bull market, and it has affected pretty much every single asset class across the globe. Timing's everything too, because the other thing that happened during the same timing here in March was, OPEC, the Organization of Petroleum Exporting Countries, had a meeting, and they were starting to talk about some of the pressures that they were feeling on the oil demand side of things versus supply. And then Russia and Saudi Arabia came into a little bit of a competition on the supply side of things, which absolutely drove oil prices to the ground at the exact same time that the globe was acting towards the coronavirus fears. And it's really hurt our Canadian economy, because we're a very energy focused economy as a whole too. So if we look at the last 3 days, we've had a bit of a rally. The volatility that we've seen in the markets is, we've never seen it to the extent that we've seen on a regular basis nowadays. Like some days the Dow Jones drops to above or below 2,000 points, and then it skyrockets the next day. The volatility has been insane. But as of Monday's prices, the U.S. equity markets were down about 34%, and the Canadian markets were down 37% since the February highs. So a significant drop in the markets, which obviously has taken a beating in people's savings and retirement plans as well.
Yeah, that's a good point. I was just talking with a client yesterday, and we were joking about his retirement, his heft. So he's either got to live less long, or he's got to make the money back.
Yeah, well, as long as he's not retiring tomorrow, I think he has some time and strategies to make it up.
Totally, and that's why you're here. And that's really the next question: is common strategies for investing in a bear market. So now we're officially in a bear market. It is slow and things have been quite difficult. We've all lost money. If we have money in the stock market out there, any kind of market, you probably lost some sort of money in the last little bit. So what are some common strategies for investing in a market like this and capitalizing on the situation or similar situations to what we're in now?
Yeah, I mean, one of the big things I would say in hindsight, 2020 is going to sound ridiculous to most people right now. But I would say one of the best strategies in any way, shape, or form is not only how to invest in a bear market, but it's actually how you come into a bear market. So, I mean, hopefully people that are listening out there weren't fully invested in 100% equities. You know, you got to make sure that you're invested. I always say that financial planning comes before investment planning or investment management. You got to make sure that your investments align with your goals. If you have short-term goals, make sure that those are tackled. If you have midterm goals, those are tackled, and then your long-term goals are tackled accordingly. You know, I mean, you're in the real estate world. If you have clients that their primary goal was buying their residence or an investment property in the next 1 to 2 years, really they shouldn't have had much of their eggs invested into the equity markets because, you know, a third or a quarter of their down payment disappeared over a period of 1 week. I would say with that, one of the primary strategies when it comes to bear markets or big correction, now we're assuming that you're investing for the long term, is stick the course. You have to strategy. Do not panic. Do not make irrational decisions because you'll lose money. When you panic and you sell, you actually, you know, you even said in just natural conversation that we've lost money because of this. Well, we haven't necessarily lost money. We've lost value in our investments. When you sell, you capitalize that loss. Now you've lost money. So sticking the course and staying away from panic decisions is probably one of the best strategies that you can use. And of course, I have to say it, but active management and professional advice goes a really long way because emotions get in our way, and it's easier said than done. 6 weeks ago, you walk down the street, you talk to your neighbor, you talk to anybody. I would ask anybody, and if I said, "Hey, what would you do if markets drop 30%?" Everybody would say, "Simple, buy low, sell high." But when things are going this way and panic and fear occurs, people don't make rational decisions. So I would say that's probably one of the biggest strategies. Just stick the course.
And that's like super key. It's funny because we see it in the real estate industry. Oftentimes people will cash out, freaking out, and throw their money into real estate because they think, well, this is obviously the next safest thing. We're going to throw it into real estate. That will be okay. So we see lots of those panicked people call us and say, hey, I pulled all my investments out. I just lost 30%. I want to make it back in real estate. And then you look at them like, okay, well, we better buy really well here. Stick the course for sure. It's easy to freak out, and maybe it's best not to look at your portfolio right now. Just keep it closed. Let guys like Alejandro take care of it, because it can get a little bit stressful when you look at it. You're like, whoa, I put more than that in.
For sure. And again, from a financial planning standpoint, if you were well prepared for situations like this, and this again, it goes back to financial planning comes before investment management. You got to make sure that you were well prepared for situations like this, because you don't know when they're going to happen. So having that emergency fund, having 3 to 6 months of your household income set aside, because another bad strategy that happens during these times is liquidity, and cash is king when it comes to this, that if you do get laid off or you lose your job, what ends up happening, people end up selling their assets, their investment assets that are at a loss, because they don't have any more accessible cash. Having a line of credit before you need it, not when you need it. When you need it, you're not going to be able to get it. Always get those emergency accessible funds before you actually need it, right? So again, that's why I kind of started with hindsight 2020. Sounds ridiculous, but at the end of the day, planning goes a long way.
Yeah, it really does. I think that was really important when we sat down to go over everything. What do we need when we want to retire? What do we want our lifestyle to look like? Those are really important things to assess, especially in markets like this and in times like this. Many of us are here at home. Maybe we're working reduced hours. This is a good time to have those discussions with your partner, or maybe you're on your own. Just have those conversations with professionals. And sit down with guys like Alejandro for sure. So lastly, we got kind of a two-part question here. How do we protect ourselves from the fall? Now, we kind of touched on that. And part two is, how do we capitalize on the upswing as we move out of this?
For sure. So, I mean, I'm not going to get into the specifics of portfolio architecture and what you should hold and recommendations in that sense. But, the theory behind it, and we really see it in play through these markets. I always like to say, I don't really brag when we make really good returns, because everybody in the market tends to make decent returns. A lot of the times what you want to look at is what happens on the downside, and how well protected your capital was preserved during those times. So a well-diversified portfolio with different geolocations. So you're not invested just in Canada or just in the US or just emerging markets, having fixed income assets inside your portfolio, having equity holdings, dividend paying stock, so on and so forth. All that can go a very, very, very long way. That in essence is what would have protected you on the way down. The reality behind it is, for those that are looking and seeking protection right now, it's probably too late. You're already too far down to really escape. That again, if you're invested properly and you're invested well, that also allows you to now ride the course, keep focused, keep determined, and stick to the process. Without giving anybody individual advice, I would really encourage people not to go to cash right now, because the markets are really far down. You're capitalizing on that loss. So again, I think we're too far down to try to start protecting now. I think what you have to look for now is essentially planning for the opportunities and knowing when to look for them, what to look for that is going to help you now recapture those gains that you've lost and potentially make some pretty good returns on the way up. Because if we believe in capital markets, I sure do. Otherwise, I'm out of a job, and most people are too. We will get past this. Markets will rebound, and there's great opportunities to make money on the way up.
Sounds great. Now, obviously, you can't predict the future, but so far in the last couple of days, there was that the bond market saw a bit of a jump, and I saw that in my own portfolio, so I got a smile on my face. So things are starting to move in different ways. The last week, obviously, was quite devastating, and we'll see where things move in the future. But if you need a professional, and the reality is you do need a professional, because you don't know what you're doing in an area like this. It's like trying to buy a home on your own. I couldn't have bought a home on my own before I was a realtor. Alejandro probably didn't have a lot of experience with investing before he became a financial advisor. The reality is we get into these careers to walk people through the process to succeed in complicated areas where they normally aren't spending a lot of time. So make sure you get in touch with Alejandro. He can help you through a time like this. And if you happen to have some cash sitting around, this could be a fabulous time. you might want to give him a quick call. Markets have reduced quite significantly. So like he said, everybody in a good time says, if it falls, of course, I'm going to buy. You might want to take this opportunity to do that. So is there any last little tidbits you like to share with anybody, Alejandro, or is that just about it?
Yeah, no, I mean, very, very similar to what you said. I'm a big believer on that, on what I like to call as a personal advisory board. We're all very good at what we do for a living. So if you don't buy real estate for a living, if you don't invest for a living, stick to the things that you know. There's people out there that help you achieve and succeed accordingly. So I'm a very passionate person, and I believe I practice it in my own sense. When it comes to getting the professional advice, seek out to those people that know what they're doing and is going to be worth your time and dollars spent. Secondary to that, we're going through a very hard time. It's a day-by-day situation. Everybody stay safe. Take the virus seriously. The longer that we don't listen to the professionals, the longer that we delay this, the longer people will get and continue to get laid off. The longer the bear market will exist, the longer the pressures on economies will last, and the harder we're going to make it on ourselves. As humankind, we're a very resilient species. I think we're going to get past this. I think it's something that we're going to look beyond in the future and come back and reflecting the past is going to change the way that we live our lives in the future as we are today. I mean, this is a perfect example of it. Businesses are going to change the way that they're doing business and treating customers and efficiencies and so on. So I think good change will come out of all of this, but every single one of us has to do our part. And I think that starts with taking care of ourselves and taking this virus seriously.
Yeah, 100%. Make sure we're taking it seriously. Stay home if you can. That is the best thing you can do. Socially distance. That's what Alana and I are doing. We're staying here at home as much as we possibly can. I drove my car for the first time 2 days ago in a week. It was a weird experience to get back in the car. It felt amazing. And gave me a little bit of hope for when we get out of this thing, and however long that's going to be. It'll be great to get back to a normal world. But in the meantime, we have to do what it takes to get there. Sure. So make sure we're all taking that seriously. Awesome. Well, I think that's all we have today here for Real Estate Chatter. But if you guys have any questions, make sure you get in contact with Alejandro. Alejandro, what's the best way for them to get in contact with you?
You can reach me via email, of course, Alejandro, ALEJANDRO @quasarfinancial.ca. And the other one is you can always reach our office, 604-424-4275. And again, happy to chat, and we'll start with your goals, aspirations, and build a financial plan around your needs. And investment management will be part of the equation for sure.
Awesome. Thank you guys for joining us here on Real Estate Chatter today. Take care, and we'll see you another time. Bye-bye.